Welcome back to Investing Talk podcast.
Today we're looking at Oklo.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. When we look at this company, it's really a study in dichotomy. You have this profound, long-term vision on one side.
Right. Commercializing their Aurora microreactor, becoming a leader in advanced nuclear fuel. It's a huge bet on the future of energy.
A massive bet. But then on the other side, you have the current financial reality, which, let's just say it's very messy.
And that reality was on full display in their recent Q3 2025 report. That was a pretty significant negative surprise for the market, wasn't it?
Absolutely. They reported an earnings per share of -20 cents.
When the forecast was, what, -13?
Exactly. I mean, that's a miss of over 50%. The market punished that immediately. The stock dropped more than 6% in after-hours trading.
And that reaction really highlights their pre-revenue status, right? When you're promising a revolution but have no cash coming in, any miss on the cash burn rate gets scrutinized heavily.
Yeah, and the number itself is, well, it's substantial. A quarterly operating loss of $36.3 million.
That's the cost of doing business in this space, I suppose.
It is. This isn't software. You're building heavy physical infrastructure. So the real question becomes, how long is their runway? Can they sustain that burn?
Okay, so that's where the counter-argument comes in. Their balance sheet is actually pretty strong.
It is. They've got a solid financial runway. They ended the quarter with roughly $1.2 billion in cash and marketable securities.
So that's a powerful war chest for R&D and moving towards construction.
It is, but you have to look at that cash in context. Given the burn rate and the sheer scale of what they're planning, that cash is finite.
And the market sees that. Which brings us to the elephant in the room, dilution.
The specter of dilution, yeah. They filed a massive shelf registration.
How massive are we talking?
Up to $3.5 billion in various securities. And this is right after they already did a $540 million fundraising program.
Wow. So that filing is basically management saying, we have $1 billion, but we're going to need several billion more.
That's exactly what it signals. And for anyone holding the stock, that risk of future dilution is suddenly very, very real.
And you can't talk about investor confidence without also touching on the volatility. I mean, the stock has had an incredible run year to date.
Over 300%, yeah. But it swings wildly.
And then there's the insider selling.
That's the part that, raises an eyebrow. The volatility is one thing, you expect it. But the insider activity.
What are the numbers there?
Corporate insiders, and this includes the CEO and the CFO, have sold off over 500,000 shares just in the last 90 days.
Oof, that's a tough look. How do you square their public confidence and their aggressive timelines with, well, selling off a big chunk of their personal holdings?
It creates a cognitive dissonance, right? Now, executives always have personal reasons to sell, but the scale and the timing here, it does make you wonder about their short-term confidence, especially right after that earnings miss.
It suggests they see some headwinds coming.
Or at least some volatility. So if the near-term financials are shaky, the long-term value has to be all about the tech and the execution.
Okay, so let's pivot to that. Let's talk about the heart of the bullish case.
Right. The foundation here is the technology heritage. Oklo isn't, starting from blank page with their reactor physics.
This is based on existing tech?
Yes, on liquid metals, sodium-cooled technology. And the important context here is that this tech has over 400 combined reactor years of operating experience behind it. Things like the experimental breeder reactor 2, EBR2.
So why does a reactor from the 60s matter for a company today?
Because it proves the core concept is reliable and safe. These are fast reactors. They operate at atmospheric pressure, higher temperatures, which means higher efficiency. And crucially, that fast neutron environment lets them use spent fuel and other materials.
Which is key to their whole fuel strategy.
It's foundational to it. That legacy completely de-risks the fundamental physics of their Aurora design.
So the tech is sound. The other half of the moat has to be navigating the regulatory side, which is notoriously slow.
And that's where their partnership with the Department of Energy is? Well, it's a game changer.
Right, the Reactor Pilot Program, the RPP.
Exactly. The big breakthrough was getting selected for 3 projects under that program. Their main Aurora powerhouse at Idaho National Lab, the Atomic Alchemy Pilot, and the Pluto test reactor.
Okay, but the NRC, the Nuclear Regulatory Commission, is famous for taking decades to license anything. How does the RPP get them to a 2027-2028 operational target?
It's a brilliant regulatory move.
Yeah.
The RPP uses the DOE's own authorization pathway. It creates a parallel track.
A parallel track to the NRC.
So instead of waiting years for all the NRC paperwork to be final before you can even break ground.
Which is the classic bottleneck.
Right. Now they can start construction and initial operations under the DOE's safety oversight while the commercial NRC process runs in parallel.
So they're essentially shaving years off the timeline.
That is precisely the mechanism. It allows them to get hardware built and tested, which reduces risk all around long before that full commercial license is in hand.
And they're not just de-risking the regulations, but the physical construction too, right? The supply chain.
Yes, that binding contract with Siemens Energy is a huge operational win. They're using proven, off-the-shelf industrial equipment for the power conversion system.
Like the steam turbine and generator.
The SST-600 steam turbine and the SGen 100A generator, to be exact.
So why is using off-the-shelf parts so important here?
It kills two major risks. First, engineering risk. They aren't trying to invent some bespoke turbine that's never been built. Second, procurement risk. They avoid huge delays and cost overruns trying to source custom parts in a tight global supply chain. It's smart.
Okay, let's get to what might be their biggest strategic advantage, the thing that really separates them from their peers, the fuel strategy.
Absolutely. This is more than just building a reactor. It's about controlling the fuel source from end to end.
Most of these advanced companies are fighting over HALEU, right? High assay, low enriched uranium.
They are, and the supply is very constrained. Oklo is tackling this with a multi-pronged strategy, sourcing fresh HALEU, recycling, and using government materials.
And that government material part is the real economic and geopolitical lever here. Let's unpack this surplus plutonium opportunity.
This is the single biggest near-term de-risker, maybe for the whole sector. The federal government is making up to 20 tons of surplus weapon-grade plutonium available.
And the old plan was to just bury this stuff.
The old plan was to spend billions of taxpayer dollars to secure it and treat it as waste, a massive liability.
So instead of a multi-billion-dollar liability, it becomes a multi-billion-dollar asset.
Precisely. Oklo's fast reactor can take this plutonium, blend it with unenriched uranium, and turn it into fuel. And the scale is massive. Those 20 tons of plutonium can create about 180 metric tons of fuel.
Wait, 180 metric tons of fuel, essentially from waste?
Yes. That completely changes the near-term economics. That amount of fuel can power a significant number of their initial plants without them ever having to get in the queue for conventional enrichment.
It's government-subsidized supply chain certainty.
It is. It's a bridge fuel that lets them sidestep the HALEU bottleneck for their most critical first deployments. It's a huge policy shift.
And that ties right into their long-term plan for vertical integration, for closing the fuel cycle completely.
That's the end game.
Okay.
They announced the Advanced Fuel Center in Tennessee. We're talking a planned investment of $1.68 billion.
And that's for recycling and fabrication. Why is recycling so critical for their margins?
It's all about energy extraction. A conventional reactor only uses about 5% of the energy in its fuel. The other 95% is still in there.
So by recycling, they can unlock that energy.
They unlock that energy and they secure their own supply chain. It acts as a hedge against any future HALEU price swings. It lets them lock in much higher gross margins on their power contracts.
So that billion-dollar investment isn't just a cost, it's a path to long-term profitability, with production ramping up in the early 2030s.
Exactly. They're turning fuel supply from an external risk into an internal core competency.
Let's shift gears a bit to diversification. It's not just about power generation, is it?
Not at all. They're moving aggressively into a related, very high-margin business through their subsidiary, Atomic Alchemy.
And that's for radioisotopes.
Medical and industrial radioisotopes, yeah.
Mm.
The U.S. market for these is often undersupplied, and they command very high prices.
And Atomic Alchemy also got the RPP selection, so it gets that same regulatory fast track.
It does. And the timeline here is even faster. They're targeting the pilot facility to be operational by mid-2026.
Mid-2026. So that business could actually be generating revenue before the first power plant even comes online.
It could. It could provide their first substantial revenue stream, which would be a huge validation for the market.
Okay, so we have the tech, the regulatory path, the fuel supply. What about demand? Who is buying this power?
The demand pipeline is frankly staggering. They're citing 14 gigawatts of potential demand.
14 gigawatts. And who's driving that?
The primary driver right now is the explosive growth of data centers and the hyperscalers powering AI.
Why are they so interested in nuclear microreactors?
Because AI data centers need baseload, 247, clean power. Renewables are intermittent. The grid can be unreliable. Microreactors offer that clean, constant, reliable power right where they need it. It solves their power density problem.
And it's not just tech companies. Utilities are kicking the tires too, right? The Tennessee Valley Authority.
The TVA engagement is a major signal. If they can sell both power and fuel services to a major utility like TVA, it validates their entire vertical integration strategy.
Which brings us back to the investment thesis, the build-own-operate model.
That is the ultimate goal, yes. They take the upfront capital risk, but in return they get these very long-term contracts, maybe 20 to 40 years. So once the plants are running, starting in 2027, the revenue stream completely changes.
It goes from high-risk R&D to stable, predictable infrastructure-like cash flows.
With very high margin visibility, that's the prize.
So bringing this all together for the investor right now, there's this huge tension, isn't there?
The tension is immense. On one hand, you have very real near-term risks. The financial losses, the stock volatility, that multi-billion-dollar shelf registration hanging out there.
And the insider selling, you can't ignore that.
And the insider selling. But on the other hand, their strategic execution has been, well, exceptional. The DOE pathway, the Siemens deal, the plutonium bridge fuel, the recycling investment.
They're systematically knocking down the biggest hurdles in the industry.
You could argue they're the technological leader in advanced nuclear deployment right now. They're tackling regulatory timelines, supply chain, and fuel security all at once.
So you have to endure the pain of the present to capture the opportunity of the future.
And that leads to the final provocative thought for you to consider. Does this federal policy shift this decision to turn plutonium waste, a massive taxpayer liability, into 180 metric tons of usable fuel? Does that fundamentally change the entire economic risk profile for the advanced nuclear sector?
You mean if the best fuel is suddenly abundant and government-sponsored?
Is fuel scarcity still the industry's defining constraint? Or is it now just a temporary problem on the way to a much more profitable future?
That potential shift in the fundamental economics of fuel is definitely the key variable to watch. We will be tracking their progress toward those 2027 goals. If you want more analysis like this, be sure to hit that subscribe button.